Well, guys, it looks like PayPal is just completely done. I mean, it's gone nowhere for over a year, and as a matter of fact, it's actually only gone down for over a year now. So maybe it's time we all consider actually selling the stock. I mean, it does make sense sometimes to sell a loser, but before we do that, I want to take a closer look and make sure that's the right decision. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. So on my video that I just released recently on stocks going to zero, the most commented comment on the entire video was about PayPal. Essentially, PayPal's trash, PayPal's going to zero, PayPal's going bankrupt, PayPal just sucks, and I don't know how else to describe it, guys. It was just PayPal is trash is the best way to go about it. Now, I agree, the stock has gone nowhere. It is absolutely in the doghouse. But when I made that list for that video, I was speaking in regards to the company performance, not necessarily about the stock price. So I feel like we need to actually look at what I was discussing there. I was discussing the fundamentals of the stock and the actual numbers, not the stock price. So let's take a look at that a little bit closer and kind of see what I was discussing and kind of see, hey, does PayPal fit in that category or not? So let's take a look at the most recent earnings, both for Carvana and for PayPal, because Carvana was obviously the one that was commented on the most, that basically PayPal was just as bad, if not worse. So let's take a look here and see what actually happened. What is actually going on with these stocks? And as you can see right there, right off the bat, I mean, we got revenue of $7 billion for PayPal, $2 billion for $2.6 billion for Carvana. But look at that net income number there, $795 million, up 56% year over year. That's net income, guys. That's profit, bottom line there. And look at Carvana there, that's a negative 160. I don't know, guys. Right there, then and there, there's no difference right there. One is growing revenues, not, I get it, it's only 9%, but that's better than being down 25% in revenue year over year. But more importantly, they're getting far more profitable with that going up 56% in the year. That's incredible, guys. Look at that margin, up 43%. Now, I got it. Yeah, Carvana definitely increased their margin too, but they're still negative. So guys, when you look at the financials of these stocks, they're not even close. That's just a high level deal. When you start digging, it actually gets uglier for Carvana and it actually gets better for PayPal. But I got it. That may not be the one that you guys want to discuss. So let's pull up the other, I guess I would call it loser, but the other one that was kind of being compared to PayPal, and that would be Lucid. And there again, what stands out at you? Sure, Lucid has great revenue growth, 159%. Now, granted, it's only $149 million, but look at that net income number. Negative 7, basically about the same as the net income to the positive of PayPal. Just an incredible difference, guys. They're not even close. I don't even know why we're having this discussion. Look at that profit margin. I don't know. There's just a lot of ugliness with Lucid, and I don't know how anybody can take a look at these financials. And I understand this is just a cursory glance. I completely understand that. But even just at its base level, on its surface level, these stocks cannot be anywhere different. So clearly, PayPal is not like those other stocks, and it's not even in danger of bankruptcy. So comparing them to bankrupt or saying they're going bankrupt is just silly. They're actually growing and getting more profitable. That usually signals you're not going bankrupt anytime soon when you're doing that. So where that narrative comes from, I have no idea. So what else could it be? I mean, why are people saying that it's trash? Why are people running from the hills, selling the stock, doing whatever? Why is that? Well, I think there is one big question that you must answer if you're feeling that way. If you're feeling like you got to sell, you're feeling like you got to run away, you don't want anything to do with PayPal. Hey, I understand if it doesn't fit your portfolio, doesn't fit your plan, whatever the case is. But if you're legitimately thinking it's not going anywhere, it's going bankrupt, or it's just a terrible stock, or whatever the case is, then I think you got to ask yourself this one question. Now, here's kind of the scenario right here. Change nothing with the stock. I mean, nothing. I mean, same revenue, same EPS, same growth numbers, same everything across the board. Change absolutely none of those. Everything remains the same. The only thing that changes is the stock price is at 120 instead of down around 60 bucks or so. What do you think about the stock then? Do you still feel like you should be selling that stock? Or do you feel like, hey man, it's on a rocket ship up? If it just basically rocketed up after earnings, to 90, then, a few weeks later, it got up to 120. Basically, if it was sitting at the 120 number, what would you think about the stock? How would you feel about the stock then? Would you still feel it was going bankrupt? Would you still feel it was a terrible buy? If the answer is no, you are letting stock price dictate your emotions, not the actual data that's right in front of you. That exact scenario where people are letting price dictate their emotions and then dictating what they do in regards to investing has gotten people absolutely destroyed this year, or they've just missed out on some incredible gains in the stocks that we all love and, basically are easy money. I mean, look at Tesla. Basically, when all the Twitter crap happened and YouTube lost its mind, all the Tesla bulls, not Tesla bull on this channel, but all the other Tesla bulls lost their mind and were saying sell, and it was down around $100 because, somehow Elon was going to whatever all the crap he was doing with Twitter and everything else, and, upsetting a certain, political base here in the US. Somehow, just deliveries were going to dry up and there was going to be no more demand and everything's going to zero, and that stock, how can you invest in it? Now it totally changes the game, and then they just had record deliveries again first quarter. You can't listen to that sort of stuff. Look at the difference in price. Even though it's come down from, that initial run up, it's still sitting a lot higher than $100. If you bought it at 120, 110, 104 like we did, they're still sitting really, really high in relation to that. You got steal deals by ignoring all that sort of stuff. Look at Meta in the 80s. Everybody, it almost was kind of a carbon copy of PayPal right now. Now, I'm not saying they're exactly the same, but oh my gosh, Meta was trading at like a, 7, 8, 9 PE. It was incredible, but it was a dying company. It was going nowhere, even though it was still printing cash. It was still extremely profitable. The narrative around it was it was a dead stock. It was going nowhere. Throw it on the trash bin. It's not going anywhere. And obviously, my last 5 buys on Meta alone were at 111, 104, 98, 92, and I'm quite happy with those buys, guys. You can't get any better than that. You can't get any easier money than that. Look at the run up, and that's Meta. These aren't penny stocks. These aren't trash stocks. That's in Meta. Look at Google when it got down in the 80s. It was the same exact narrative. It's dead. ChatGPT is going to kill it. YouTubers were bailing on it like crazy, and now look at the stock. I mean, it hasn't rocketed up like Meta has, but we were busy buying. My last 5 buys in that are 90, 87, 83, 94, and 90. Again, up huge on a great stock like Google. It's not like I had to take on any sort of risk with these sorts of stocks. I didn't have to take on any risk at all in order to make a very good return in a very short time on a very safe stock. And don't forget to check out the pinned comment if you want to see all buys like these in real time and be able to ignore the noise and everything else that comes along with it. You get 5 free courses. You can slide into my DMs. And the special price for my group does end this weekend, so make sure you check out the pinned comment down there and get your spot before the sale goes away. Oh yeah, and there is a special announcement coming to the group specifically. So members, if you're a member, make sure you look out for that announcement. I should drop it Monday morning for you guys. So make sure you're paying attention there. Now, I'm not saying PayPal has the same sort of rocket ship trajectory that Meta had, or it's as good as Tesla or, Google or anything else like that at all. That's not what I'm trying to say. What I am trying to say is that they are beat down disproportionately for stupid reasons, for no good reason. I'm not saying everything's been great, but Wall Street does this from time to time. They are dumb. They beat down things to disproportionately stupid reasons all the time, and that right there is where the golden opportunities were. Everybody's kicking themselves now about Meta back then, right? It seems so obvious now, but at the time it didn't. But this is what Wall Street does. They get dumb.
But Luke, it's been down for over a year now, so that means it's probably not coming back. I mean, Meta wasn't down that long. Google wasn't down that long, but this one's been down for over a year now.
True. I agree completely. It absolutely has, and that has been frustrating, not only for me, but I'm sure for other shareholders as well. But think about this for just a second. Apple has traded down or flat for 6 months to a year, basically over the past 10 years during one of the greatest bull markets in the history of the stock market, and that's Apple, guys. These aren't speculative plays, not anything else. How can during the greatest bull run in the history of the stock market, a stock like Apple actually trades down or flat for, 6 months to a year, maybe a little bit more at a time? And look at Tesla, right? It traded down for 6 years during the greatest bull market of all time. Think about that. I can say the same exact thing about Google, about Amazon, which of course is beat down again. I can say this about tons of stocks in the stock market that during the greatest bull run, and Microsoft, you name it, during the greatest bull run in the history of the stock market, the greatest stocks ever, or some of the greats ever in the stock market, traded down or flat for a period of 6 months or years. So when I kind of think about this, I kind of go, wait a second, that can happen to the greatest stocks during the greatest bull run of all time, but it's unreasonable to think that it can happen to a stock like PayPal during a bear market? When you kind of think of it in that context and kind of put it in that context, yeah, honestly, it does make sense for, PayPal to trade down for a year, year and a half or so. What were all those other times with all those other stocks when it traded down for that long? They're called golden opportunities to add to those stocks. Now, when does it run back up? I don't know. It could trade down for another 6 months. It could trade down for another year. I have no idea. I'm not here to guess when a stock's going to go on a run because I'm not a trader. I'm not trying to time the bottom and then time the top and then play all these other games. And that's not what I do. I'm a long-term buy and hold investor. Talk to me in 3 to 5 years and let me know how I feel about my PayPal position. That's kind of the time frame I'm looking at. Now, is it possible it still goes nowhere over that course of that time? Of course it is. It happens. PayPal may actually be a dying company, but when I look at the numbers, I look at what they're doing, and I actually get into the financials and I actually get into the fundamentals of the stock itself, it's disproportionately beat down. It's trading right now at like a 4 PE of like 13. I mean, come on. It's a, you got other stocks like McDonald's and stocks like that out there trading at twice the PE of that one. It just doesn't even make sense at this stage. Now, when does it come back? I don't know, but that's kind of where I'm getting at with this. Is kind of, you gotta let go of stock price and understand that stock price, if it's dictating your emotion on a stock, and if you honestly, at 60 you'd hate it, but if it was up at 120 or 180 or 200, you'd think it was great. Well, you're just basing it based upon the stock price, not based upon what the company is actually doing underneath and what the health of the company actually is. So you can't do that. You got to look at the health of the company. And then it's much easier to discern opportunity, like we saw with Meta, like we saw with Google, like we saw with a lot of other great stocks, and avoiding a disaster like Carvana and, Lucid and other stocks like that. Looking at that will make the difference for your investing in the end and have you buying great deals instead of terrible hype stuff. And remember, if you want to see all my buy and sell alerts in real time, my watch list with price targets, take basically 5 courses for free, be a part of the best Discord out there, have access to me anytime, slide into my DMs, jump on my Q&As. Make sure you check out the pinned comment down there and see exactly what all is included with it. And oh yeah, there is a special announcement coming on Monday for everybody there in the group, so make sure you're looking out for that video. And click this video here to see the stocks I'm buying, and click here to see my exact plan during this market. So thanks for watching, and we'll see you in the next one.